desperate. Desperation is the child of oversizing. It makes a man sell too soon, buy too late, change his system, abandon his rules, chase tips. A comfortable size keeps desperation out of your blood. It makes you steady, and steadiness is worth more than any tip or any chart. Many men never understand this truth. They think the secret to nerves is in the man, not in the money. They read stories of great operators who held their lines through panics, and they think those men were born with iron wills. But the secret was never willpower. The secret was always size. Those operators had sized their lines according to their capital. They could hold because they were not drowning. They looked calm because their positions were comfortable, not because they were superhuman. A speculator who sizes correctly can look just as calm, no matter his nature. You can give a nervous man the right size, and he will act like a veteran. You can give a veteran the wrong size, and he will act like a child. Ask yourself this: what is the point of courage if it cannot keep you in the market? What is the use of boldness if it drives you out too soon? The only real courage in speculation is the courage to wait. And waiting is only possible when you have not overburdened yourself. The man who is carrying too much cannot wait. He must act, and usually at the wrong moment. He must snatch at safety, and the market punishes him for it. The market always punishes the man who cannot wait, and the inability to wait always comes back to size. I have said before that the market is never wrong, opinions are. When your size is too large, your opinion becomes your prison. You cannot change it, because changing it would cost too much. So you sit, not out of patience, but out of paralysis. You tell yourself you are holding with nerve, but you are holding with fear. The market sees it and will break you. True holding comes from comfort. It comes from knowing that if the market proves you wrong, you can take the loss and move on. That knowledge makes you calm. That calm is what men mistake for courage. It is easy to say, I will be disciplined, when your size is small. It is impossible to be disciplined when your size is too large. The size controls the man, not the other way around. If you wish to control yourself, control your size. That is the number one rule, the first law of speculation. When your position fits your capital, your nerves will be steady, your judgment will be clear, your patience will be natural. You will not need to force yourself into discipline. Discipline will flow from your comfort. And only then can you truly speculate, because only then can you see the market without the fog of fear. Size is not about greed, it is about control. Control of losses, control of nerves, control of decisions. Too many men step into the market with the wrong idea that the bigger they play, the bigger their chances of striking it rich. They imagine size is the lever that multiplies their fortunes. But the real purpose of size is not to make you rich in a hurry. It is to keep you steady so that you can build wealth over time. If you look at the men who last in speculation, the men who grow their stake year after year, you will see that they are not controlled by their trades. They control their trades, and that control begins with size. The speculator who sizes properly is like a general who never commits his whole army to the first skirmish. He holds reserves. He measures his strength against the enemy. He advances when the odds are in his favor, and he retreats when the tide turns. He does not throw all his men into battle at once, because he knows that a lost battle is not the end of the war as long as he still has troops in reserve. A trader who puts too much money into a single position has no reserves, and therefore no control. The market turns against him, and he is beaten before he has a chance to regroup. He may think he is bold, but in truth he has handed control over to the market. Control of losses is the first duty of proper sizing. Every man who speculates must understand that losses are part of the game. You cannot avoid them. You cannot wish them away. You cannot prevent them by cleverness or by courage. The only thing you can do is make sure they are small enough not to cripple you. And that is entirely a matter of size. A small position that goes wrong is a scratch, a lesson, an inconvenience. A large position that goes wrong is a disaster. It wipes you out or leaves you so wounded that you cannot fight again. If you can cut a loss quickly and without hesitation, it is because the loss is bearable. If you cannot bring yourself to cut it, it is usually because the position is too large. Size determines whether you can obey your rules or betray them. Then there is control of nerves. A man who has control of his nerves can see clearly. He does not chase the tape. He does not listen to rumors. He does not jump in and out in panic. He watches, he waits, he acts when the time is right. But nerves are not a gift of birth. They are a function of comfort, and comfort comes from proper sizing. If your position is well within your means, every tick does not feel like a threat. A 2-point move against you does not shake your confidence, because it is not large enough to do serious damage. But if you are oversized, a 2-point move looks like the end of the world. Your nerves fray, your vision blurs, and you start acting not on reason but on fear. Fear is the enemy of every trader, and it comes into play when the size is too large for the stomach to bear. Control of decisions follows naturally from control of nerves. If you are calm, you can think, you can follow your plan, cut your losses, pyramid your profits, wait for the right moment. If you are in a panic, you cannot think. You break your rules, you snatch at profits, you hold losers, you average down. The decisions that ruin traders are almost always born of fear, and fear is born of poor sizing. A trader who puts on a line that is comfortable for his account can act with detachment. He is not tied up in the outcome of every tick. He can make decisions based on the market, not based on the size of his losses. In other words, he is in control. Greed blinds men to this truth. Greed whispers that more size means more profits, forgetting that more size also means more danger. Greed convinces a man that if he is right, he should bet everything on it. But greed never considers what happens if he is wrong. And in speculation, wrong comes more often than right. The difference between winners and losers is not that winners are never wrong, but that winners keep their wrongs small. Losers let their wrongs become ruinous, and they do so because their greed made them too big. Greed wants the quick fortune, but speculation punishes greed more than anything else. The man who sizes for greed is already half beaten, because he has given up his control. Think of a man sitting at a card table. He may have the best hand in the room, but if he bets his entire roll on that hand, he has no control left. One unlucky card, one twist of fate, and he is out of the game. The smart card player never pushes everything forward unless he is prepared to leave the table for good. He sizes his bets so that he can withstand a run of bad luck. He knows that one hand does not make a career. The speculator must think the same way. No one trade makes your fortune, but any trade can end it if your size is wrong. Control is more important than victory in a single trade, because control is what lets you live to fight again tomorrow. Now consider pyramiding. The only safe way to build a position is by using the market's profits to pay for your increase. That is control. If you add to your position with money the market has already given you, you are never overexposed. You are playing with winnings, not with your stake. But if you pyramid with your original capital, you are letting greed, not control, dictate your size. You are building a tower on a weak foundation. And when the market shakes, and it always shakes, the tower will collapse on you. Pyramiding is a tool of control when done correctly, and a tool of destruction when done by greed. Another form of control that comes from proper sizing is patience. A small position allows you to wait. You can let the market confirm your view. You can let the move develop. You can hold through the minor reactions. Patience is not a virtue. It is a byproduct of comfort. A man who is too large cannot be patient. He feels every moment as a crisis. He must act, and usually at the wrong moment. Impatience ruins more traders than ignorance ever did. And impatience is nothing more than the voice of discomfort caused by poor sizing. Control also shows itself in independence. When your size is too large, you will find yourself hanging on the words of others. A tip, a rumor, a headline, anything that gives you hope or fear will sway you. You are no longer thinking for yourself. You are letting the crowd think for you. But if your position is comfortable, you can ignore the noise. You can trust your own judgment, because you know that a bad outcome will not destroy you. Independence of mind is a mark of every successful speculator, And independence begins with size that allows you to stay in control. The man who thinks size is about greed is like a horseman who thinks speed is about whipping the animal harder. He may get a burst of motion, but he will not get far before the beast collapses. The horseman who understands control will ride smoothly, steadily, for miles, while the other is left in the dust. In speculation, the man who sizes for control outlasts the man who sizes for greed. Outlasting is everything, because the market always gives opportunities, but only to those who are still in the game. Size is not a weapon to win battles. It is the shield that lets you fight them. The men who get rich are not those who bet the most, but those who bet in a way that kept them steady. Steadiness is the hidden edge in speculation, and it comes from control. Every man has greed inside him, but not every man learns how to master it. The way to master it is not by wishing it away, but by sizing your positions so that greed cannot tempt you into ruin. Control your size, and you control yourself. Control yourself, and you can control your trading. A man who sizes right can sit still. A man who sizes wrong must always run. That is the difference between the winners and the losers in this game. The market pays the man who can sit, and it destroys the man who cannot. But sitting still is not about patience alone. It is about the comfort of your position. If your size is proper, you can wait. If your size is too large, you will be forced to run from every shadow. Men often talk of courage and nerve, but the truth is that most of what they call nerve is simply the ability to sit without strain. And strain comes from size that is out of proportion to capital and temperament. The great moves, the kind that make fortunes, take time. They do not unfold in a day or a week. They build slowly, testing the nerves of everyone who rides them. There are reactions, setbacks, feints, false breaks, shakeouts. The man who tries to capture these moves with a position too large for his means cannot hold on. He may be right about the direction, but the market will scare him out before the big swing comes. He will run because his account, or his mind, cannot take the strain. And when he runs, the market wins, not because it was against him, but because he was against himself. The ability to sit still, to wait for the market to complete its work, belongs only to the man whose position size is right. You can see this truth in the tape rooms, in the bucket shops, in the exchanges. The men who are over, committed, pace the floor like trapped animals. They whisper for news. They curse the fluctuations. They are always waiting for the clerk to call their margin. They are never at ease, and so they never sit still. They dart in and out, covering here, buying there, always acting, never waiting. Their very size forces them to run. On the other side of the room you might see a man who is calm, who watches without excitement, who can leave his desk for lunch without fear. That man has sized correctly. He can afford to let the market breathe. He is not frightened by a small reaction because his position is comfortable. He can sit still, and in the sitting comes the profit. The small fluctuations are the ruin of those who size too large. A 2-point drop means little to the man who has a modest line, but it means disaster to the man who has his whole fortune tied up in it. The small move that is only noise for one is terror for the other, and terror always forces action. The man who is terrified cannot sit still. He must run. He must sell too soon or hold too long, but in either case he loses. The market is designed to frighten men out of their positions before the real move begins, and the only way to resist that design is to sit. The only way to sit is to size correctly. The importance of sitting still is not a new lesson. It is as old as speculation itself, but generation after generation forgets it. Men think they will outsmart the market with cleverness, with quick trades, with constant motion. They imagine they can dart in and out, catching every little fluctuation. But the profits are not in the fluctuations, they are in the big swing. And the big swing can only be caught by sitting. If you are too large, you cannot sit. You will always be forced to take action when none is required. The market loves to make fools of such men, and it never fails. You must understand that the market is a machine designed to shake you out. It does not rise in a straight line, it climbs by shaking. It throws men off with false breaks, with violent reactions, with sudden drops. It tests every holder. Only those who can sit through these tests take the prize at the end. The rest run, not because they wanted to, but because their size gave them no choice. If you are carrying too much, you cannot sit through a shakeout. Your nerves will betray you, or your margin will. But if you are sized properly, you can ignore the tricks. You can sit, and by sitting you can ride the full move. It is not enough to be right about the market. You must be right in a way that allows you to profit. Many men predict the market correctly and still lose. They lose because they could not sit still. They could not sit still because their positions were too large. They were forced to act by their fear, or by the broker's call, or by the drain on their capital. A man who sizes properly can be wrong for a time and still win in the end, because he can afford to sit until the market proves him right. A man whose size is too large can be right in the long run and still lose in the short run, because he cannot survive the waiting.